What is up, you guys? Pete DiCarlo, and today we're going to talk about support and resistance. What I want to do with this channel a little bit more is go over actual trading strategy, as well as how to use specific indicators, why I pick certain options, and I wanted to start with the absolute basics, which is going to be support and resistance. Now, this might be a little lengthy of a video because we're going to go over a lot of things, but even though we're explaining what would be considered the basics of trading for those of you who are more advanced, it is extremely important that you understand the basics and implement the basics to absolute perfection. The basics is what works. I'm telling you guys, like, I run an academy with 700 paying clients. So obviously I'm doing something right, but most of what I do is just perfecting the basics and implementing them to perfection. A lot of people think you need a specific indicator, you need a specific trading strategy, but if you just understand the basics, understand candlesticks, support and resistance, and charting, you will be a successful trader. So let's get started. When we're looking at support and resistance, there are a lot of things. I have some notes that I'm going to end up putting below for you guys, so it'll be a lot easier for you to see. But as of right now, we're going to go over them from start to finish. I'm going to give you guys some examples. So support is a price level where buying is strong enough to interrupt or reverse a downtrend. Support is represented on a chart by a horizontal line connecting two or more bottoms. So right now, this is Netflix on a 5-year chart, and you can see that we're on a daily. So each one of these candles represents one day. Now, if we were to just go and draw out some major horizontal lines here with our draw tool, you would notice that at this point right now, we have a strong area of price action right here at about $400 range. Now, we're going to talk a little bit more about this when I get into my notes later. But support and resistance is not one specific price. It is just a trading range. And you can see as well, we have another one right down here at $272. And then you can see that most recently here, we have a very strong resistance range right here at $567. And as we zoom in, it'll be a lot easier to see. Now, resistance is a price level where selling is strong enough to interrupt or reverse an uptrend. So you can see that this right here on Netflix has been a very strong resistance. So even though over the past 5 years, Netflix has been trending up overall, this resistance, which we will define as a price level where selling is strong enough to interrupt and reverse an uptrend, this has been that area. So every time we touch this range of like $570 to $600, we reject. So selling comes in, stock sells off. Push up, selling comes in, sells off. Selling comes in, sells off. Selling comes in, sells off. Selling again, selling again. And so all support and resistance is an area where people are selling. That's going to be your resistance. And an area of support is where people believe it's a good idea to buy. Now, it is better to draw support and resistance lines across the edge of a congestion area where the bulk of these trading bars are, rather than across certain extreme prices. These congested zones are what most traders will change their mind and enter and exit a position. So most of your entries and exits will be based off support and resistance. Yes, you can use a lot of these, indicators that we have down here like MACD, which I really like to use, the RSI, which we're going to talk a lot about. But at the end of the day, what you really want to do is to be focusing on your support and resistance and your price action. Those are the most important things at the end of the day, because what you have to realize is that is where psychologically people are saying we do or we do not want to buy, right? We either want to get in here or we don't want to get in at these prices. So I'm going to put this to a weekly chart so it's easier for you guys to see these bars instead of being such a viewed, pulled out area. And what you can see here, and let's just look at this area from October 2018 till April of 2020. You can see that every single time we approach this resistance, we decide as a collective of traders, because each one of these bars is a psychological representation of the market, that it's not worth buying Netflix up here, but it is worth buying Netflix down here. So remember, we're not looking at specific prices. It's not like a stock touches $400 and then something fundamentally changes with the company to where, everybody sells. And it's not like every single time we touch the support area of like 275 that, something fundamental happens and it's a great time to buy. It's all based off of psychology of traders. So remember, support and resistance zones are not a specific price. We already went over that. It's a general area of resistance and a general area of support. I see a lot of people who say to me like, oh, well, we didn't, let's say right here, for instance, with Netflix, oh, well, we pushed up past this resistance. Are we going to break out, now? And we're going to talk about false breakouts and how to tell if they're false later on in this video. But just because the stock pushes through resistance or, goes down through support doesn't mean that that support is not valid or that resistance is not valid. Because remember, it's a zone. It's not a specific price. Beware of false breakouts of support and resistance. Amateurs tend to follow these false breakouts and breakdowns, while professional traders tend to notice these things and trade accordingly. So I already talked briefly about this here. Be a little bit easier if I go to the daily here and show you guys this. But like I was saying before, just because a stock goes over resistance doesn't mean it's breaking out, and just because it goes below doesn't mean it's not breaking out. I'm gonna show you guys some important things to look at when we start showing those false breakouts. Now, support and resistance are only relevant because people have memories of the past. Support and resistance exist because massive amounts of traders feel pain and regret, and most traders also feel FOMO. So like I was saying before, going back to the psychological breakdown of candlesticks, each one of these areas exist because the trader has felt pain. Traders in the past and the present and the future have all felt pain, and this is why they get into these things. They get greedy when they see that it broke through resistance, and then they hope that the stock will continue to push up, and that's when this false breakout probably killed a good amount of people. They get greedy when the stock gets down below this area. Oops, I zoomed in too much. But they get greedy when the stock, pulls below this area. They buy in, and then when it dumps, they get fearful, and then the stock moves up. So all that you're seeing when we zoom out here on like a 10-year chart is psychology. You're seeing that people psychologically remember, when I buy, Netflix down at 270, it's a good idea. When Netflix hits 400, it's not a good idea. Now, after this, I want to talk about support and resistance are only relevant, like we said, because people have the past, and resistance, this is one of the most important things, will always turn into support once we go through it. This is like one of the 10 commandments with trading. So you can see that right here between this $400 range was a very strong resistance for nearly 2 years. So from basically April of 2018 all the way out till April of 2020, Netflix did not go above $400 and hold. But what you will notice here is that on this earnings, we had this big push up and we had a ton of volume. So look at all this volume right here. And this is one of the most important things, like I'm going to speak about later on, to show you guys how a breakout is confirmed, and it's not a false breakout, but it's a volume. You need volume. So you can see a ton of volume came in. Earnings were very good, which is a fundamental reason to break through this resistance finally, and the stock pushed all the way up. Then we pulled all the way back and touched on this support. So remember, old resistances, so this resistance at like 400 range, became a new support. So when a stock pushes through resistance and then pulls back and holds that resistance area, that becomes a new support. So a new line in the sand is drawn. And you can notice that when this happened here, this false breakout, look at what happened. Big push up, pulled back, we could not hold this support, and then it dumped. If we could have held this support and volume could have came in, which did not happen, then we could have continued to move our way up, but it didn't. So if we go back here, like I said before, all resistances become new supports. So on this day, Netflix pushed through resistance, pulled back, and now we've used $400 as a support for essentially like the past year and a half, 2 years. So that is very key. All resistances will become new supports. And the inverse, all supports, if broken to the downside, will become a new resistance. The longer the price stays within this zone, the stronger the emotional commitment from the bulls and the bears have to that specific area. So the more times that a stock touches a resistance, the stronger it's going to become, and the more time that it's hits a support, the stronger it's going to become to a degree, and we're going to talk about that in a little bit. So the strength of each of these zones are dependent upon three things. The length of time, which we talked about, is important. So support and resistance on a 1 minute chart is nowhere near as strong as support and resistance on like a daily or a weekly or a monthly chart. The length of time of the chart holds much more weight when it comes to support and resistance and technical analysis across the board, which is mainly why I trade off of the daily chart. So length, height, and the volume of trading that has taken place within that specific area. So if you look at the volume profile here, which I'm going to make a video on later, you can see that we have a lot of volume within this trading range. So we have a lot of volume. It's been in this area for a very long time. And you can see that it's a pretty wide trading range. So try to think of support and resistance like cheese or like wine. The longer that it's there and the more times we touch it, the stronger it becomes up to a certain point, which is what we're going to talk about now. The longer that it touches those support and resistances over a long amount of time, it actually becomes weaker. So what I tend to notice is around 10 years, 5 to 10 years on a massive time frame chart is where it starts to become weaker, because markets are cyclical, which just means it happens in cycles, and traders are constantly coming in and out of the market. And guys, as much as you might not like it, 90% of people fail at this. So let's say you have 100,000 traders coming in this year, which is way more than that, but let's just say it's 100,000 traders are starting trading this year. That means that probably within the next 6-7 years, only 1,000 of those people will be in there, maybe 10,000 max, right? So 90% of people fail. That means that, maybe 1 to 10,000 of those people will still be here out of that 100,000, which means that all of those people who emotionally were using Netflix as a resistance right here at 400, when it falls back down, it might not bounce at that support because those people are no longer in the market. Because you have to realize, I'm looking right now at a 5-year chart. If you're trading off of a 1-year chart and you just started trading, you don't even know that that was a support. You're looking a lot closer than I am, in time frame right now relative to what I was just looking at, that you only see these two areas of support and resistance within this daily chart. So at some point, it does become weaker. Because if you look at Netflix over the past year, these are very strong trading ranges, but you might not even see what was happening a couple of years ago. So the greater the volume of trading in a support and resistance zone, the stronger. High volume shows that active involvement is happening by traders and is a sign of strong emotional commitment. So you can see here, every single time that we touch this support area for the most part, or this resistance area for the most part, big volume comes in. So let's just break this down and zoom in a little bit more. So let's take a look right here. Volume was pretty low within this range, and every single time we touch this resistance, volume gets higher and then pulls back. Volume gets higher, good volume comes in, and then we pull back. Good volume on the day we touch support, then low volume. Good volume on this day, low volume. Good volume, low volume. So you can notice every single time we touch big resistance and bounce, big resistance and reject, or big support and bounce, there's good volume on those days, which is what's important. And good volume around support and resistance shows that there's an emotional commitment to that area. If there is low volume, it shows that there is not emotional commitment to that volume. To that support and resistance area. You probably should not trade it at that point. So some rules and some things to think about when we're trading support and resistance, and there's only 5 of them, but they are very important. Number 1, always protect your capital. So always use a protective stop if you're a new trader. I, most of the time, do not use a hard stop, and that's for a couple of reasons. Number 1, market makers know when you have a stop loss set. So this is why I talk about trading zones. Let's take a look at Netflix here. This is just like the past year, but this is from August of last year to December. We know that there's a hard support at 480. Now, like I said before, this is why I use a zone. It's not like every time it touches 480, it bounces. You can see a couple of times it fell below support, came back up. Fell below support, came back up. Fell below support, came back up. Now, if you look at Netflix, imagine if you saw support here at 477 and you set your stop loss right below support. What would have happened every single time you entered this position? You enter at the support and you set your stop loss, which is smart, right below support, because that would mean it broke the support and it's going to go the other way. You would have stopped out, it would have went the other way. You would have stopped out, it would have went the way you planned it. Stopped out again, went the way you planned it. So while you should set a hard stop if you're a new trader, because you might not be disciplined enough to know when to walk away, I'd rather you guys set a stop and it triggers and then it goes the opposite way rather than you just bag hold it. So you should probably set a hard stop if you are new. But for me, I don't do it most of the time because I've been trading so long. I have a lot of discipline because I know that market makers can see where you have support and resistances and they know how to knock you out of a position. Now, the next is support and resistance are important on a long-term chart instead of a short-term chart. We already talked about that. If you're trading off support and resistance on the 1 minute, it's not going to be as strong as support and resistance on a daily chart. Now, number 3. Support and resistance usually end up in trading opportunities. You can see that here with Netflix, and we're going to go over some other examples on some like major stocks like Apple and Facebook. Every single time Netflix hits resistance, you could have taken a short position or got a put on this and you would have made money. Every single time Netflix taps support, you could have got a call position or shares and you would have made money. So normally, every single time a stock hits support and there's good volume, it's a buying opportunity. Every single time a stock hits resistance and there's no volume, it's usually a good time to go short. Now for me overall, if you guys are in my academy or you've been following me for a long time, I don't usually go short. Even if I see that it's tapping at resistance 5 times, there's small amount of volume and it's going to reject again, I never go short. I would rather always wait and just buy at support than go short at the top because I don't like going against the stock market in general. Like overall, 95% of the time the US stock market is in a bull run. And so I want to trade with the probability that it will continue to do that. So number 4, this is important. You must be careful of false breakout and breakdowns. The biggest thing you're looking for is volume. False breakouts, like we said earlier with this support, hurts amateurs, but professionals love them because it's the best time to buy a breakout to the upside is on a daily chart when your weekly chart is showing that there's an uptrend is starting and a true breakout is confirmed by heavy volume. False breakouts are confirmed by low volume. So let's take a look at something like Texas Roadhouse, TXRH. Actually, let's look at Snapchat. That's a good example. Snapchat will be a very, very good example. So if we go here, and let's not even worry about all this. Let me remove all this stuff for you so it'll just be a little bit easier to understand. Okay, let's take a look right here. So we're going to pretend like none of this exists, and I'm just going to show you this. So you can see that at this very moment here, we have a strong bull flag forming. So we have a big flagpole here, and this flagpole is forming. If you guys don't understand bull flags, I'm going to make a video on that. But if you don't even understand what all this means, you can obviously see that there is a channel forming here where every single time the stock hits this resistance, it goes down. Every single time the stock hits support, we bounce. We come down to support, we bounce. We hit resistance, pull back. Now, this is where I want to explain to you guys. There is a couple areas of false breakouts. You can see that in this example right here, the stock tapped resistance and pulled back. But in real time, because this is a daily chart, 3 days in a row, this stock actually went above resistance. So if you looked at this when this was up here, you would have thought to yourself, like, we have pretty good volume, not a ton, but pretty good volume. This is the breakout. But look at what happened the very next day. Volume got lower and the stock held. The next day, volume got lower, and then because volume didn't get higher, we completely fell, and then we use that as a resistance. Now, if the stock pushed up and we held over resistance, and then the next day we had more volume come in and we held resistance, and then the next day more volume came in, I would have bought that breakout, but it didn't end up breaking out. So the stock pulled back, pushed up, and now this is a good example here because in this example, we had this big push up, volume held, big push up. Now here's one example that's actually a good example to show you guys because volume did not come in heavy, but something important did happen. We pushed up, and what happened different here than happened here? instead of closing below resistance like we did back here, we actually closed above resistance. Then the next day, even though there was low volume, we held this resistance. Remember, old resistance becomes new support. So now we held this. The next day we held it. The next day we held it. Then we started to push up, pulled back, use that as a support. So you have to realize that if you're going to look for a breakout to the upside, you want to see volume, or at the minimum, you want to see us using this old resistance as a new support. Then from there, obviously, we had a bit of a run, pulled all the way back, redefined that support area of $60 again, and then we had earnings in which this pushed up. So let's take a look at another one, which would be Apple. Apple is always a good example, but you can see here, false breakout. We have this pendant where we have this false breakout that happened back here, low volume on that day, right around here, actually higher volume because we had earnings, but then the next day we had low volume. We rejected, and the most important thing, we did not close above resistance. We actually closed below resistance, couldn't hold, came back down, bounced on support, 1, 2, false breakdown right here, came right back up, held, used this old resistance as a good support, and then pushed our way back up. So that's what's the most important, guys. Volume, and also using old supports as new resistances when we're breaking out of patterns. Now, I don't want to make this video like an hour long, so when I actually break down specific, like, bull flags, bear flags, pendants, all of that, that's when I will actually break down when entries and exits are looking good and when you can tell false breakouts. But guys, overall, I hope that this video helped. Comment down below if you still have some questions. If you guys want access to every single trade that I take or get more access to my trading, you can become part of our private academy. All you have to do is go down below and use the link. It's going to say private academy, and you can use the code DISCIPLINE to start 100% for free your first month. Guys, you'll get access to all of my trades, access to our private Discord server, as well as access to our 60-hour course library where I teach all of this. Guys, thank you for all the support. Hit the like button, subscribe, and I'll see you next time.